Test. Microphone is working. Alright, what's going on, guys? It's Sid here, back with the third iteration of our gbpusd series, breaking down the myriad of timeframes, starting with the higher timeframes on the daily, using that to construct our thesis, and then relating that to the intraday lower timeframes so we can look for some execution layers. In the last episode, as you can see from here, we have part 1 and part 2, both of which will be linked down below. In the last episode, I started with a long bias for the week, how I wanted to see price move into the 1.34770s and potentially further into the 1.35880s, where we got exactly that. What we saw last week is we pushed below these equal lows, we reclaimed them on the Friday, and we held above them. Okay, once we held above them here, that's when I had the long bias. That's where I wanted to start looking for longs, looking for this price region to get tapped and breached. That's exactly what we got. Before that occurred, what we had is one more drive into the lows to take out the Friday buyers to accumulate new sellers for the week, and we had a super strong daily closure back into this zone, back into the September lows, followed on Wednesday with a super high volume, high price action candle to push us to the upside to kind of resecure this near-term trend. So we had a great bias from the previous video. If I pull up the lower time frame, what we're going to see here is the longs that I was able to execute. So here we had the Friday lows, tapped them out in the Tuesday London session, tapped them out once more in the Tuesday New York session, followed by Tuesday New York was followed by a high volume candle to the upside, pushing us into this newly developed trend. This is where I executed at the 1.32800s, and we had super positive price action across the next set of sessions and days, pushing all the way up close to our targets. In terms of profit taking, I took fairly significant profits here at the 1.33900 zone, which is these highs that we formed on the previous Thursday. We were able to tap them out, and then once we were able to reclaim them, okay, and turn this into support, we've shown even more upside action where I was able to trim my position slightly further. So as it stands, from these longs that I took last week, I've taken significant profits, I've banked them, and now I've looked to re-execute new longs. The reason being is these equal highs up here at the 1.34900 are still untested and untapped on the lower time frame perspective. So what I've done with these longs here, the ones that you can see immediately on your screen, is I'm essentially risking some of the profits that I've taken off on the previous longs from last week. I'm risking them early into this week to see this further drive into 1.34900. So on like a cost average basis, on like my average entry basis, I'm still in one of these previous positions, and I'm risking the profits that I've already taken off the table. So from like a risk analysis perspective, I'm really happy of this. I'm not risking fresh money, I'm risking money that I've made on this pair already. I'm essentially hedged all the way down from the lows, so if this were to come down, I'm still going to have exposure on the long side, etc, etc. If we come back to the daily, you'll see that the 1.34770 zone that we've got marked out here, this is what initially was an imbalance. 1, 2, 3, 4, 5 candles traded into it, turned it into a liquidity pivot in alignment with our mid VWAP. That's where we tapped into to absolute perfection the target that I provided in the previous episode on GU. So I was really happy with that. We're now like trading in this new range, as you can see, that I've kind of like mapped out as so. On the daily level, however, negating the fact that I want to see this push into 1.34900, on this daily level you're going to see that we've left this imbalance marked in black at the 1.33700, 1.33720. So on a daily perspective, irregardless of this low time frame, if we go up first, as I'm kind of anticipating based on the previous chart, this is the level I want to see fulfilled next, 1.33700. If we can push into this level, have a strong daily closure or set of daily closures at this zone, and create this more efficient market, then I would anticipate price moving into our next daily region of interest of 1.35880. That is the daily target I have been looking for the past week or two, once price has been ready to do so, and I believe price is ready to do so now that we've had this change of structure. So how I'm going to look to play this on the low time frame, firstly I'm going to continue to allow my longs to move into the 1.34900. I'm going to negates the fact that this needs to be tested, because the near-term liquidity and the near-term value is still going to be to the upside on this immediate term basis. But once the 1.34900's been taken out, then I'm going to be looking for this reversion back down. So the 1.33700 on this lower time frame, you're going to see is this gap that we've left around here. Directly above this gap, we have the Friday lows, these Friday lows as so. So if we were to test into this gap, what we would be doing is taking out the Friday lows. We'll be taking out buyers from Friday New York through to all of Monday sessions. And then we could be looking for the reclaim. We hold above this area, push into the upside. So once we get this test into 1.33700, you could take your initial entries here and your secondary entries upon a reclaim and retest of the previous Friday lows. So you're going to be able to layer your entries. You're going to be able to split your risk up into multiple scenarios, creating a higher probability trade. And by the time that you are able to put your entire risk into the trade, you'll have several factors of confluence suggesting this should be pushing into the upside. Some people may be asking, well, if we are going up to first to 1.34900, should I be looking to take shorts to the downside? Yeah, that's definitely possible, especially given that, at least in my case, I'm going to be hedged with these longs, or the remainder of these longs, all the way down from the bottom of the lows. So it'll be a lot easier for me to mitigate my to take these shorts, because my risk will be mitigated from the existing longs from the lows. But if you don't have these longs on with such an efficient entry like myself, these shorts are the lower probability trade. Okay, these shorts are the lower probability trade. While there's something I may consider executing and may attempt to execute, it's only because of the risk dynamics from my personal trading is going to allow me to do so. If you don't have these longs and the lows, or you don't have super efficient long entries like I do, then maybe you should hold off this trade, because the daily perspective is telling you to go for buys. With that said, an intraday trader like myself, I'm going to trade any opportunity the market provides. So if the setup is too good to not take at the 1.34900s, then I'm going to take it. But ultimately, what I'm going to be looking for later in this week is a test into the 1.33700, 1.33800. I can take my first set of entries here, and if we push and reclaim previous Friday lows at 1.33900, I can take my secondary entries there, splitting up my risk, ultimately improving my probability of winning this trade. If we're going to go down and continue to collapse, I'm only going to, through this 1.33700, I'm only going to have like half of my risk on the table. So that's how I'm looking at GBPUSD. That's how I'm going to be playing it. Push to the upside, 1.34900s, take out these highs, these equal highs from up here. Then we look for the reversion back down into the daily level of 1.33700. Once we interact with this zone, we split the entries up. We don't put full risk and full port this trade right down at this gap. We take a bit of an entry here. We allow it to reclaim Friday's lows. That's where we're going to take the next set of entries. On a daily perspective, if we were to hold on to this zone here, then once again we're going to look to ping pong back up to the previous Friday highs, as I've mentioned, which is this liquidity pivot in alignment with our mid VWAP. If we breach this area here, then the daily perspective definitely tells us that we're on for this move into the 1.35800 zone. So that's how I'm going to be playing GBPUSD. A lot of information, I know, a lot to synthesize, a lot of coexisting theses, but ultimately, as you can see from these lines that I've got here, these are the daily ranges that I'm going to be playing, and then whatever the intraday market tells me to do, day by day, session by session, is how I'm actually going to approach it. I know the key levels of interest. It's just going to be my job and your job to understand on an intraday basis, where is the value, where do I need to go next. Don't just blindly long, expecting this target to get reached or tapped into it straight away. I've given you a myriad of levels, just this 1.35800 being the ultimate final level that I should be looking to trade into. But I've given you a myriad of levels that you can trade between. The highest probability trade is going to be the pullback into the 1.33700s and push up into the 1.35800s. So depending on what type of trader you are, the context of your trading plan, etc., that should be like the highest probability trade you should look to take. But there are going to be several opportunities between the levels that I've provided in this video for you to take trades. I will, at least in my Discord, try to post as many of them as possible, whatever ones the market is going to offer, whether it's the long back into the short, back into the long, whether it's just a long into another long, whatever it is, whatever the market provides to me, whatever I think is a high probability trade is what I'll post and cover in the Discord. But this is a synthesis of the information of the points of interest and the points of execution on GBPUSD. If you've enjoyed this video, enjoyed this series in general, make sure you leave a like and a comment, message me on social media. I'm quite pleased with the responses I've got so far. I know a lot of people are enjoying this series, likely because we're being right so many times, but as long as you continue to enjoy it and continue to show support, I'll continue to pump them out. That's going to be all from me today, guys, on GU. Trade responsibly, appropriate risk, stay safe. Cheers.